Lucien Perreault. Welcome to the show.
Oh, thanks. Yeah, thanks for having me. I'm happy to be here.
So I discovered you on Twitter. It seems like you have a very interesting background. And I think where I'd like to start is your introduction to real estate, how you got into it, and how it's going so far.
Awesome. Absolutely. So back in 2014, I started looking around at houses and I thought, like, this sounds dumb, but I was like, well, I think I'm an adult and I think adults buy homes. So I started looking around. I ended up finding a property out in San Diego, a condo. And at that time in 2014, that's when the market had already bottomed out and it was slowly starting to tick back up. So I found a condo that it, the lady hadn't done anything to it since she bought it when it was built in 1981. So it was a little run down, but it was in a great location, absolutely great location. It was overlooking the ocean, had a phenomenal view. I used a VA loan to purchase that. And the whole reason I ended up taking interest in real estate wasn't necessarily the purchasing of the house. It was when I started to dive into the mortgage process, everything that I had to go through and all the documents that I signed. I started to run all the numbers and started to understand exactly what I just signed. Because to be honest with you, I had no clue. I was just signing stuff and kind of listening to what everyone was saying. As the process went through and I started doing some more research, I realized that the mortgage officer, he actually did the numbers wrong and he overcharged me on a certain fee by about $5,000.
Oh.
And I called my mom and I asked for her friend's number, who was a lawyer, and I said I would like to sue this guy for 5 grand. And she's like, "Well, you're going to pay me more than you're going to get from him." So she's like, "Just learn from the mistake and move on and try and maybe teach other people." So then I started to really dive into this, and for the next 7 years, you could say, I started to really study real estate. I started to fix the house up, started to do all the bathrooms, the kitchen, and slowly kind of did like a live and flip. I learned what house hacking was. So then I rented out one of the bedrooms to a friend and just really started to use that property as my kind of like a guinea pig to figure out how this all works. And then I learned that you can pull equity out of the property, tax free. So then I did that. I took the money out, paid everything off, and then it got to the point where I was like, okay, I think it's time to sell this and see where we can go from there. So I ended up selling the property in 21, and then I went and bought a 4 unit, and it cost about, at the time it was $1 million, and they gave me a 2.5 interest rate. And the property currently cash flows. I got it all up to date, and it's currently fully rented, and it's working out really well. It's worth about 1.15 right now. I lived in it at the beginning, so it was the more advanced house hack, and now I'm starting to dive into other realms of trying to find the off-market properties, starting to get into flipping, and also the education side of teaching people what I did so they can try and copy what I've done.
For someone not familiar with what a VA loan is, can you describe what that is and some of its characteristics?
So a VA loan is for someone who is obviously served. You can either be active duty or a veteran. As long as you've served about 2 years of active service, you qualify for the VA loan. It gives you the ability to purchase a home with no money down, and it comes with no PMI. And you can use, if you go for the duplex, triplex, and quadplex, you can use the income from the other units to actually add to yours, so you can actually afford more. So you can do all that. It kind of mirrors what an FHA loan does. It's almost the same style. It's just it allows you to go all the way down to 0% down payment versus an FHA with 3.5%. But it's a great program. Very underused, undervalued, but it's an awesome loan. that if you are active duty or you are a veteran, you should definitely look into using it if you haven't.
Now, for people that are not in the military, I just heard that the VA loans are what they're calling assumable. So someone, if someone that wasn't in the military approached someone that had a VA loan on a property, it sounds like you can assume their mortgage. Do you know anything about that?
Yes, I know about the VA loan assumption. So if you let's say you're I'm assuming you haven't been in, and
Correct.
I am currently in the service, you can assume my loan, even though you're not in the service. You can assume my property that has a VA loan. The only It's not really a downside, but what would happen is that entitlement that I used on that property, I would have to carry that. But yes, you could take that loan over and you could assume that. And it's a great way, especially people that bought in like 2020, 2021, or maybe they refinanced in 2020 and 2021 and they got a really low interest rate. Instead of selling just the property, you could try and sell the mortgage. So right now, instead of me going to get a 7.5% interest rate, I could sell you basically the mortgage at a 3% interest rate, and you could just assume that, and maybe we work on a side where there's some cash or something like that. But yes, you do not have to be a veteran or active duty to assume a VA loan.
Very cool. Yeah, I just heard that, and I think that could be a game changer if people are finding or having a hard time finding deals that cash flow. That might be another avenue to look into. So on your Twitter, it also mentions you do a little bit in private lending. Could you talk a little bit about what you do in that realm?
Yeah, so I partnered with a company or a couple companies up in Wisconsin, and they find deals off market. They do a lot of wholesaling and they do a lot of flipping. They go to the sheriff's sales and they pick up deals there. They do a lot of the short sales as well, so they pick up deals in that realm. What they need is they're always looking for money to fund their deals. So basically, I told them, well, I have a decent network of people that have money. What if I brought instead of bringing you deals, I bring you the private lenders? So I started working with them on that. I connect the private lenders with them. They get the deal done. And then I'm also someone who, if you don't know what private money lending is, like what the benefits are or how to get into that, I know pretty well. And I educate people on how it works and how it's beneficial, how it can be better than just letting your money sit in a bank or sitting in an IRA. And you can take advantage of real estate without being actively involved in real estate. So that's one of the huge things about being a private money lender. You get to be involved in the whole thing without having to do any of the work.
Awesome. Are there any so do you use any I've heard of some private lending platforms that have come up. I think Private Money Club. Do you use any sort of platforms like that, or do you have any experience with those types of markets?
I joined one briefly. It was very unorganized,
Okay.
so it wasn't very beneficial. But I'm part of a couple other masterminds, and there's a lot of people in there that they're always looking to park their money somewhere and trying to make some money off of their money. So that's usually what I use. Those platforms that you're talking about. I mean I got into one like I said, but it wasn't worth the hassle.
Okay. Cool. Duly noted. Another thing that seems very interesting is you have an affiliation with the pro hockey team. Why don't you tell us a little bit about that?
Yes, so I long time ago, I've been playing hockey my whole life, but while I was active duty, I really wanted to play at a higher level. So I found a team out in San Diego, and it was a semi-pro league that still played at like the full professional rules, all that good stuff, the same structure. And then eventually, I took over the team. COVID ended up kind of ruining that, but we had a bunch of lessons learned, and now we relaunched a new team called the San Diego Super Hornets. And currently, we are a semi-pro hockey team out of San Diego. We're going to be playing out of the Mountain Hockey League. We'll be playing teams from Vail, Breckenridge, Jackson, Wyoming, Bozeman, Santa Rosa, California, Las Vegas, Reno, Nevada, Phoenix, Arizona. So there's a whole bunch of teams. And what we're trying to do as a league is make it into what you just said, a professional hockey league, basically. And think of it, if you know baseball, they have the major leagues, AAA, AA, single A. We are trying to make this league into like a single A level. So an entry level minor league hockey league, basically. And, you know, it all just boils down to, we're just trying to keep the game alive for people as long as possible, because not everyone's going to make the pros. But hey, you can go play single A for a little bit, you know, do an entry level and live that dream for as long as you can and get into the professional realm. So that's basically what we're trying to do. And it's quite the project, I can tell you that, because it's not, you got to really love hockey, because there's a lot of extra stuff that goes on, not just the game itself.
Yeah, I mean, it sounds like you're a very busy guy. How do you allocate your time? If you were to break it down, what percentage are you devoting to like real estate, private lending, and the Super Hornets?
Oh man, well, I can tell you that my weekends are pretty much if I have a weekend, it's all devoted to, like, I'll split it up. Well, Saturday morning, I'll devote that all to like the real estate and the private money stuff. And then in the afternoon, I'll transition into all the hockey stuff. You know, I deal with mostly the marketing and the scheduling of everything. So I'll get on the Instagram, Facebook, Twitter, all that stuff. I'll get on like Canva, or I'll take videos of me and really start, you know, developing content to market, like kind of like commercials almost, basically. And then I really focus on that. Same thing on Sundays. I kind of have the same structure in there, minus, you know, I got to make time to go to church. So I do that too. And then throughout the week, obviously I work. And each day, Monday through Friday, it's not the same. So I try and look out the schedule to see what the next Monday through Friday is going to be. And I'll try and allot as much time as I can. Like right now I'm on a lunch break, so I'm squeezing in talking to you really quick. And I mean, it can get a little bit overwhelming because there's no breaks. And before you know it, I'm going to bed and we're waking up and we're right back at it again. But you know, it's a grind. There's a lot of stuff that has to get done, but I'm hoping over the next 4 to 5 years, you know, it all pays off and it was worth it. But I was always busy as a kid. We always had something going on. There was no time just sitting around doing nothing. So this is basically the life I've been living since I can remember.
Cool. Well, I mean, a lot of people here, like, you know, whether it's semi-pro, amateur, whatever, it's to actually be involved in the team management. It sounds like a huge commitment. In terms of the financial commitment, what did that look like getting involved with the Super Hornets?
Well, I'd rather not. I'm not going to put out a number
Okay, no
right now.
problem.
I can't, not legally able to really talk about all that. But what I can say is, you know, if it takes money, it takes money to start this off. Whether you're going to go find it through an investor, or you're going to go pull out, you know, a line of credit, business line of credit. You're going to take out a small business loan, whatever the case may be. It's going to take some money, because, you know, you got to think about it. You're paying for ice time. You're going to have to pay for referees. You're going to have to buy uniforms, practice uniforms. You're going to go on the road. You got to figure out, well, how are we traveling? Are we going on a bus? Are we going on a plane? You know, what are we taking with us? And then when we get there, we got to stay at a hotel. Who's paying for that? How is this all getting funded? So there's money that has to be involved. And then all the stuff that I just labeled out, you know, we're printing off flyers. We're trying to market as much as we can. We got commercials going on, advertisement. And at the same time, I mean, we're not trying to break the bank. So we're trying to be as fiscally responsible as we can. Obviously, we know we're brand new. So we want to make sure, yeah, we're targeting the right people right off the bat, like the people that we know for a fact that are going to be interested. And then as time goes on and we really start generating some sort of, you know, we got a lot of people, or we got some interest going on, then we can start expanding who our reach is going towards. So yes, at the beginning, it takes a little bit of money, whether it's yours, someone else's. There needs to be some money there.
Mhm. And in terms of the advertising, do you get a sense? I don't know if you've been able to experiment enough, but do you get a sense of which avenue you're getting like the biggest bang for your buck?
Right now, believe it or not, Instagram Reels
Oh,
seem to be the ones that are dragging out the short stuff. Those seem to be, I mean, you're just trying to grab attention and hold on to it as long as possible, get them to hit like and maybe comment, share, or at least follow the page in 10 seconds or less. And the better the content, the better the music, the better the video, and all that stuff really plays into it. Because at the beginning, I was just making a bunch of random stuff and just starting to like just throw stuff out there, kind of not really worrying about quality, just trying to get quantity, just to start pushing stuff out there. And now that we have a bit of a following, now I'm starting to lean more into the quality. Now I'm trying to keep people around and trying to generate more interest from people that might not have saw it the first time, that weren't as dedicated to hockey, that probably wouldn't have clicked on the not as great video. So now we're starting to focus more on the quality. But yeah, Instagram Reels, even the Facebook Reels too. And we're eventually going to jump on YouTube, and I'm sure the YouTube Shorts will probably be the way to go. And then obviously you want to have some long content in there too to really explain what's going on. But to grab the attention, yeah, the Instagram Reels for sure.
I think a lot of content creators in the beginning, yeah, it's just important to just get started. When you're talking about that transition from quantity to quality, were there some hires that you made that really you felt moved the needle? Or what would you say? What kind of shifted in that mindset from quantity to quality?
It was, so where the shift came from was we were kind of hitting like a ceiling. You could see, because when you go on to Instagram, you can see the insight, the data from all your posts, and it'll tell you how many accounts it reached, how many people that are already following you, how many that it reached there, how many new accounts it reached. And so we kept hitting a ceiling. It's like, okay, I think we've maxed out with just the quantity. Now I think we need to work on the quality. And once we started doing that, and I really worked on the video quality and then the sound, and really trying to, I don't know, find the right music and the right, just a lot of stuff went into it. And then I did hire someone that came out and took professional pictures, a professional video, and he made a legit reel, put the right music to it. And as soon as I sent that out there, boom, I mean, it hit almost 5,000 accounts in one day. So it made, obviously we broke through the ceiling. Now it's trying to repeat that. Like, you're not going to do that over and over again. You're not getting that every single day. But if you can hit that a few times, absolutely, it's worth it.
Awesome. So we're gonna start wrapping it up, but just to bring it back, we started with real estate. I kind of wanted to end it with real estate and personal finance. You recently had a tweet that said real estate is better than a bank. Could you describe what this means to you?
Well, what it means to me is, you're not, if you look at a basic savings account, checking account, like obviously you have to have a checking account. Money's going to come in and it's going to go out. And then having a savings account just for some emergency fund, absolutely. That's basic personal finance 101 right there. But beyond that, if you look at a savings account, what's your return on that? And then your growth rate in a CD. I mean, it's locked up for 18 months. Yeah, right now you might get a good rate at about 4 or 5%. But if you go into real estate and you find, you're not going to buy a CD and then you're going to rehab it, can't do that. But you can go find an off-market property or even one on the MLS, and then you can just make some quick updates to it, whether that's your personal home or your personal residence, and then you gain that equity that you can't do that out of a savings account. And then you can control it. You have more control on what's going on with that property. You get to, if you want to rent it out, you get to determine, you can start doing cash flow, and then you can start making these capital improvements to the place. You can't do that in a bank account. Your money just sits there and you let it get eroded by inflation. There's no way around it. Inflation is here, It might not be as bad as other places, but if your money's just sitting there, then you're not doing any good. And this is where the private money lending comes in. Let's say you don't want to go buy the house, you don't want to do this work. Okay, that's fine. You can be a private money lender. You can go fund someone who will go find the deal. They'll do all the work. They'll sell the property. You can either just take a standard 8 to 12% interest rate and collect that money, whether you do it monthly, quarterly, or all at the end when the project's done, or you could JV on it. So you'd be a joint venture. So let's say I brought the money, you were doing all the work. We decide that we're going to do 50-50. You do all the work, you sell the property, we split the profits 50-50, and I get the return of principal, and then we go do it again. You're not going to do that in the savings account. It's just going to sit there. So there's plenty of options to not only make money, but then you can also protect your money. So if I lock my money into a piece of real estate, not only is it probably growing at a better rate, but then I can get the depreciation from that asset too to help lower my tax liability. You're not going to get that from your money just sitting in a savings account. So there's so much more to putting your money into a piece of real estate, whether it's making a solid return on interest, whether it's the depreciation, the cash flow, the equity gain through sweat equity or whatever. You're not going to get that in a savings account. I'm not sure if a lot of people understand all those benefits. Yeah, it comes with a risk, but there's also ways to mitigate a risk. And if you're partnered with the right person, usually the risk is very, very low. I know with the people that I work with, no one will ever guarantee you a return on investment, but they'll always guarantee you a return of investment. So whatever you invest, so let's say you invest in a property $200,000, they guarantee that you will get that back. Now, hopefully everything goes right, or it doesn't have to go perfect, but it goes well enough that you also get the return on investment, but you will be guaranteed a return of investment.
Okay. So you mentioned, because I was going to ask on these private money deals. So you said like between 8 and 12% is what you're typically seeing right now. If you could go through like how some of those payments are constructed or the payback periods.
All right. Well, we'll make it really simple. Let's say the deal, you're all in between the buying the house and the rehab. You're all in for $100,000, and we're giving you a 10% interest, or 10% APR. So basically, we're going to take 100,000 times the 10%. That comes out to $10,000, and we're going to divide that up by 12. However long we hold on to your money. So if it's 2 months, 3 months, 6 months, we'll then multiply that number that was divided by 12 times the amount it was actually held by, and that will be your return. So if it's held for the full 12 months, which is not ideal, but if it is, you'll get the full $10,000. But the idea is to try and do this more often than just a 12-month period.
Gotcha. Understood. Cool. And I will leave with this last question. If you could give us your best piece of personal finance advice and the worst advice you've heard.
Worst advice is just throw everything into a retirement account and live on the bare minimum. Just throw it in there. That's the worst advice I've ever heard. That gives you absolutely no flexibility, and that money is locked up until you're 65. You can do that if you want, but I won't do that. And the best piece of advice that I can give somebody is, I think you need to focus way more of your effort on increasing your income. Like, stop focusing so much on decreasing your expenses and saving. How low can you take your expenses? 0? Yeah, I guess you can go live out in the woods and pay absolutely nothing. But what you can do is you can always increase your income. If you focus on that, you'll be able to invest more. You can then have a bigger savings for if something goes wrong. And then, it gives you a lot more flexibility. So 90% effort on increasing your income, 5% on decreasing your expenses, and 5% on saving.
Awesome. Great advice. Lucien, thank you so much for coming on. Why don't you hand off the listeners with where they can go and find you?
Well, you can find me on Instagram. You can find me at SD Super Hornets. That's our team page. And then also at Lucien Perreault. And then on Facebook, Lucien Perreault, same thing. And you'll see me. I'm pretty recognizable. And then also the other one where I post most of my real estate stuff is on Instagram and Twitter. So Instagram is at L Perreault 23. And then on Instagram is at DI_2_REI. So that's where you
Awesome.
can find me. I'm pretty active on all that stuff.
Cool. I'll link those in the description for everyone interested. So thanks so much.
Hey, thank you very much for having me on. It was fun.
It was a pleasure having you.